Hello, traders. This is Blake Morrow, and you are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. And let's take a real quick look at the S&P. We are once again challenging the underside of that major trend line. I think it's pretty key here. It's also like the intraday highs, real close to the intraday highs. I was thinking we're going to have a little head and shoulder pattern here. Let me delete these really quick. But instead, we're just brushing up against some key resistance right now. I got to watch that. And while I'm looking at the S&P, you might as well take a look at the Dow. The Dow is actually a pretty important resistance as well. Take a look at the this is the previous breakdown point. That's why it's so important. Let's pull up the daily chart. Okay. So this would be the low from back here in right there in December of 2018. So we're basically just hitting the previous support, acting as current resistance. I expect it to hold at least the first time around. I mean, we've rallied 3,000 points thus far from the lows, roughly. So I expect that this level is going to hold here, at least the first time around. It's so big, but that doesn't mean that it's going to hold moving forward. It's just you're going to probably knock your head up against it a couple of different times. Now let's take a real quick look at the euro. The euro's been kind of damn this cable. I was so upset. I went and I got to show you guys this. I shorted the euro pound just an hour ago, maybe, right? I was shorting it right here an hour and a half ago, right here up against the 50% retracement. It was right at 92.30 something, right here, 92.30 something. Not this 50% retracement. Actually, it was before we were getting the 618. And I was shorting it here, and I made like 10 pips. It dropped like into the 20s, and I said, it just doesn't feel right now. And then it hit the 618 at the 92.61 and reversed really aggressively. I had already left. I already went to go take a shower and go make myself some breakfast, that type of stuff, and I missed this whole move, which is a little irritating to me. The Euro Aussie has been a really good. That's been a really good coming out of a descending wedge. I made really good money in the Euro Aussie today. That's where I made a bulk of the money that I'm profitable today in this, and it's holding up pretty well. And it's holding up well despite the rally back that you see in equities, which is surprising. So if you are long equities, and you have pairs like the Euro Aussie that are showing strength, that's a little bit of a negative or a little bit of a warning sign. Let me just put it that way. The Aussie, big failure today above the 60 cent level, which I think is very, very important to understand. We had this rally above 60, squeezed everybody in European trade. And now we've reversed. And what's going to be really bearish for the Aussie, in my opinion, and so you got to watch this tonight, is if we break back below this, this 59 level, roughly, we break back below 59, then everybody's screwed. Everybody who got long right up here is going to they probably, I'm assuming, have their stops below the 59 cent level. We're still 50, 60 pips off of there, but what's shaping up right now is a false breakout, and that's something that should be watched. The Kiwi, big resistance held at 59 cents. That was a big deal. All right, so that's something to pay pretty close attention to. And I was keeping my eye on the US dollar Canadian, that we are at support here, and this is a triangle. Now, if stocks continue to rally, the US dollar Canadian should roll over, right? It should start to sell off. However, if stocks do stop here, the US dollar Canadian is going to bounce right off of this support. So you got to think about that too, knowing that we're at really key resistance for the S&P. Gold isn't doing much right now. I've kind of lost interest in it because, you know, it was a good long for me early this week, and it's kind of consolidating. I don't, because of the big discrepancy between futures and what the spot market's doing, I'm kind of leaving it alone right now. I do ultimately want to be long gold, but I think being long gold down here is probably going to be a, you know, something I'm more interested in, you know, being long somewhere down here versus where it is right now. But if you guys are not part of the ForexAnalytix family, make sure you try us out. You know, we do have the volatility offer available, so make sure you take advantage of that before we remove that. And I had one question. No, Shahab said, "Hey guys," it's only me. Well, and then all of you, but I'm the only one that's going to be talking here. So anyway, have a great one. Thanks for tuning in. It's been kind of it's a little bit of a choppy market. I think you need to be careful with where stocks are at right now. Be careful about getting too bullish. One of the things I needed to bring up regarding the stock market, knowing where we're at right now, is we know what the package is that's coming, the virus package that's being passed. I asked the question to the folks in our chat room, you know, what else do we have to look forward to right now? I mean, unless there is a, you know, miraculously there is a treatment that is FDA approved for the coronavirus, or there is some sort of, you know, vaccine, neither of which I expect right now, then you got to be really careful buying when you're at resistance. If you really feel that you want to buy stocks, you got to buy them when they're dipping, not necessarily when they're rallying into resistance, because we're in a different market now. We're not in a previous bull market where you're like, oh, I just buy any dip and then I make money. No, now, because the dynamics of the market has shifted, if you really want to be bullish, you got to be bullish on dips versus trying to, you know, buy rallies, because, you know, you could end up getting long right up here, and, you know, tomorrow we're trading below 2,300, and you're like, wow, what happened? Well, the bear market that has taken hold of this market over the last, you know, few months or a few weeks is got its bear claws in you, if you will. All right, guys, have a great one. Thanks for tuning in, and I will catch you tomorrow morning on the Face webinar. My name is Blake Morrow. Over and out.